Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Good morning, good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. Thanks to Jim Cagnina for reading that disclaimer. We have a great show today, this week, and I want to welcome back, of course, the star of the show, Anthony Crudele. How you doing, Anthony?
Tom, what's going on?
Not much, not much. We're starting to actually feel some heat out here in the East Coast on Long Island. So glad to be in a little bit of a cool place right now and talking to you. How you doing?
I'm doing great. I'm excited for today's show because it's an actionable thing that I just did yesterday. Yesterday, I was short NASDAQ all day long. I didn't turn a profit. I tweeted about that. I'm very open and honest about that. But it's one of my favorite setups when it comes to mean reversion trading. And I think for day traders, this is such an important episode because we always talk about trying to trade with the trend, right? And a lot of times when we're trading with the trend, we maybe go days without getting setups and the trend continues without us. And your body and your mind says, you know what? I think I can make a few ticks on the mean reversion side. And because you miss a lot of what happens with the trend, psychologically, a lot of people go to try and fight the trend. And this is the premise of, this is really where I think majority of traders really start to run south and start to develop bad habits. They start off good with good intentions. I want to trade with the trend. I want to find setups within the trend. And they come in the day trading and they're trading both sides aggressively, actively, over trading, and most of the time get run over by going against the trend. And when it comes to mean reversion trading, this is what set me back so many times as a trader when I started in the late 90s. As most people know, if you've looked at charts back then, that was a bull market. Very similar to what we have now. This market keeps going higher. And I don't remember last time we had, I think, a down 1% day in NASDAQ. And so today I'm going to show everybody something that helped me tremendously when identifying mean reversion trades. Specifically, we're going to talk about the indexes.
So quick question, Anthony. Why is that? What in your estimation? I don't think we have to go into it too long, but why is it what is that instinct to fight that trend? What is that? You have a belief the trend is going to go one way. You might have missed it. You didn't get in. You don't see your setups, but the trend keeps going in the direction. What is that instinct to fight that? Is it like a recency bias? I want to get back into my setup, so let's almost wish the index back the wrong way, or what is that?
Well, look at NVIDIA this year. It's one of the perfect stocks that I look at, and when it was down at 100 or wherever it was, nobody wanted it, and as it started to rally 200, 300, 400. You see a lot of people I see on social media talking about, well, it's getting ready to pull back. They've been saying it for $200. And ultimately, the reason why you start to think that way psychologically as a trader is you look for the mean reversion trade is because you missed the first 100 or 200 point move of being long it, right? And so I think psychologically, it's very difficult for traders to stay with primary trend only because, let's face it, when you are trying to buy something in a bull market, you don't get the pullbacks that you want to buy. And so everyone's like, oh, we're due for a pullback. It's got to happen, right? And And it just feeds on itself because it doesn't happen. You get a lot of people short, then it squeezes higher. It's just that same type of thing because everyone's like, look, I couldn't get it long, but we're priced high now, right? And then they look for that mean reversion trade and they might say, oh, I want to buy it back on the dip right away, but I think for now I want to be short. And remember, when you're in a bull market, you're always hitting resistance. So if you have support and resistance levels, which a lot of people love levels, when you get to a level of resistance, that's the actionable trade because you're not getting to the level of support because the market doesn't pull back far enough. And that's why it continues to happen.
Okay.
So today, I think what we'll do is we're going to go right to the charts because I want to show everybody. I tweeted about this, and I know going into an FOMC day, a lot of people were probably even thinking like, well, how can Anthony be wanting to go into an FOMC day short? I actually did go into it short yesterday. And I'm going to explain really my entire process as to why I like this mean reversion setup specifically for the NASDAQ, S&P, Russell, and Dow. I use these for indexes mostly, not as much for commodities, mostly for indexes. Now, we've talked about the Bollinger Bands. Number one, 20-period, 3 standard deviation Bollinger Bands, Fibonacci retracements. I've discussed this many, many times. I like to use fibs from peaks of Bollinger Bands. And Tom, we could share a link later and people can go back and see why I look at this. But I just want to show everybody for today, I want to go through this process. Remember something. When you have bull markets like the one that we have right now, and some people might say, well, it's not technically a bull market because we haven't taken out the all-time highs. I understand that, but when the NASDAQ's up double points percentages, I don't know exactly how much it's up for the year, how many percent the S&P's up. They're all up a good amount. This is a bullish tape. So whatever you want to say, okay? When you have that, I like to look the Bollinger Bands, and I know that we talk about this a ton on this show, but as the Bollinger Bands move, it really is showing you, and I always like to look at that, like it's almost like the elasticity outside of the market, how much the market can and it move in its current set of volatility. And so the Bollinger Bands continue to be my number one choice. They're my number one choice for most of my strategies, but specifically for this on a daily chart. And when you look at them, it just gives me such a clear signal of green light, red light. Like, can I be short? Can I not? And if you go back and look here, this is going back to the end of May. Look at the Bollinger Bands. I put these 30% lines. If you just draw a Fibonacci retracement from one peak to the next, until the market has a daily close below that 30% line, it's 30%, 50%, and 70%. No matter what the top Bollinger Band is doing, the market just continues to grind higher. And so it stays in that top 30% quadrant. And when you look at markets, whether you're looking at fibs or anything, I like to look at really just quadrants, like where are we within the context of these ranges, right? And so Bollinger Bands, because they're always predicting basically the volatility of the market, it's telling you based upon the price action that we have right now, we're in this top 30% near a 3 standard deviation move. And remember, a 3 standard deviation move is not an easy move to get, right? That they don't reach them that often. Even look here in the NASDAQ, is that there's only been there hasn't even been 2 times in the last month and a half have we hit the top Bollinger Band, which is a 3 standard deviation move away from a 20-period exponential moving average. And so it doesn't happen often. It doesn't happen rarely at all, but it'll stay in a bull market if it stays above that 30%. And so when you go back to the end of May, you see how that happened there. It stays above it, grinds higher. Bollinger Bands stay up. Can't be short. There's not been a short setup that I've had, and I can't tell you how long in the NASDAQ. Then you get to this point where all of a sudden you see this previous peak here and this peak here, and I do my fibs over it. It gets below it one day, next day right above it, and just sits above it. And it sits in that top quadrant. So every single day I'm coming in and going, man, this thing can't even get below the top 30%, that quadrant of the Bollinger Bands volatility. Bullish, right? Finally, the other day, I waited to see multiple days closes below the 30% level, which is roughly 15,750. I know it's got the 40 handle on it, but that's just leave that as a general number. And so when I looked at it, I said, okay, 1, 2, 3 closes below it. And the reason why I waited actually to tweet about this is because I have to be so patient with a mean reversion trade that it has to prove to me on a daily chart, not one day, but most of the time, 2 or even 3 days, it closes below a level that I like, and then watched it test it. 2 days in a row, it couldn't get above it. So yesterday and the day before, I was looking at shorting NASDAQ because it couldn't get into that top 30% quadrant. And I said I'd be wrong if it got above it. And I'm going to get into intraday to show how I did it. But I put this in play to make me so patient when fading a trend that I need this to happen. We always talk about patience and discipline. I always say kind of blah, blah, blah with that, because most traders are not going to make money just by being patient and disciplined. They've got to put something into play that forces them to wait for something. That's how you create patience. And that's what I did with this.
So, Anthony, I just want to be clear, because you have different areas where the levels are wider, and then you have like the current setup with the retracement levels that's narrower. Is it because you went from being in a bullish state with the Bollinger Bands, then there was volatility contraction with the bands coming together, you kind of contracted, got narrow, and then they opened up again? Is that when you reset your retracement levels from peak to trough on the Bollinger Bands?
Yes. So if you go back, we'll do a quick look here. You had the peak Bollinger Band. The Bollinger Band started to expand. New peak. You don't change these fibs until what? It crosses over right here. You could see I stopped it right here on this bar, which is the middle of June. Crosses over, new high Bollinger Bands again. Draw them once the Bollinger Bands get flat, and you see mean reversion again. Remember, when Bollinger Bands are expanding, you are not going to get a mean reversion trade. I mean, you might see a pullback in any sort of trend, but when Bollinger Bands start to revert back in, that means what? That means that volatility is now decreasing. And if volatility is decreasing, most of the time, and this is just in the context of these situations, not vol like you're talking VIX, but volatility in this time frame, when it's decreasing, is when you potentially have a mean reversion trade. The market is taking a breath. And so that's why I wait for those scenarios. And then I use that 30% line or 70% line, if it's the counter trend in the opposite direction, like a bear market coming back up, to see if the market can sustain within it. Because if it stays within that 30%, it typically means grind. And that's just what we've seen. I've seen it all year in NASDAQ. This is probably the first time I've been short NASDAQ yesterday in months. And I look back at it and say, I did exactly what I wanted. I'm going to show in the shorter term charts how I did it. But until it got below there, I just stayed away from it. I was joking in our chat the other day. I said, this is when my portfolio does really well, because the NASDAQ keeps going up every day. I've got some NASDAQ stocks in my portfolio, but my futures trading, a lot of times is boring. I'm not doing a ton. I try to find long setups. If I get them, great. But if I get a mean reversion trade, I'm going to trade it. And I'm only going to trade it during the day. And I'm even going to use some daily options, which I'll explain as well.
Awesome. Thanks for explaining that. I think it's a clear picture to me, but I want everybody to understand why there's the reset.
No, perfect. Yeah, it's absolutely important. And so let's go back to what I look at in my day trading strategy. And so everything stems from the daily on this. And then, I've talked about my 3-minute, VWAP strategy. I even have the Bollinger Bands up here. I don't even need the Bollinger Bands up here right now. I actually can just remove them. But they're up here for now, so I'll leave them. But ultimately, all I'm looking for when I get a sell signal like I did in the NASDAQ, stay short below 15,750 and looking for the market to continue to pull back is a mean reversion. All I look for is I'm short when we're below the VWAP intraday. That's it. There's nothing else to think about it. We get below it, we get short. Yesterday, opening broke. I got short, got above the VWAP. I got stopped out. Got short below the VWAP, trailed some orders. This is where I had my biggest run of the day yesterday. And I did get a little piggy there where I covered most of them, but I kept them, went back up to here, added. And the next thing you know, I got blown out on a stop again. But, I basically was just back and forth, making some money, getting blown out on some stops. I put my stops above the VWAP, probably in the NASDAQ, anywhere between like 5 and 7 points. Usually I just keep trailing them down below it, because if it comes up to the VWAP, I don't want to get stopped. And, because the NASDAQ, you got to adjust for the slippage. And so I just tried to hold it, and I mean, into the Fed meeting, kept it. At the end of the day, kept doing it. It was basically like, a day where, it just didn't pan out. But at the end of the day, because I got these decent moves lower, I was able to take some risk off at some of these standard deviation bands and really protect myself from, being able just really getting blasted on it, because at the end of the day, we had that huge rally, and so I like to take an idea from a daily chart and just be super simple in direction during the day. When it comes to really any strategy for me, especially for a mean reversion strategy like this, I don't want to think too much about, I need to find the perfect entry. This comes down to position sizing, period. When we're below the VWAP, I'm short small. And I try to scale out and I try to keep it. I don't know how far the move is going to go. I don't know how long the move is going to go lower. I just try to stay short. And for me, you could do it in a few ways. You can go to micros. I was trading actually big NASDAQ, which is E-minis, micros, and I was trading event contracts. Turned out that my biggest winners were in micros and event contracts. And where did I lose my money? In the bigger NASDAQ. Well, I lost my money in the bigger NASDAQ because when I scaled out of some of my positions, when they started to come back and they'd stop me out, because the position was bigger, the market was, I just was getting really nowhere with it, right? Because I wasn't putting on massive size in the NASDAQ where I can trail out of a bunch of them. But with the micros, and I do this a lot, where like I try to do big NASDAQ, micros, and like an event contract or, a micro option. And I do it in scale like that because I try to keep the core position on small with the micros. So like when it gets busy, all of a sudden I'll have the bigger picture or the bigger NASDAQ on at the VWAP, it rotates down, and I'm not even worried about my micros. I just trail that stop. And it's funny, my micros, the smaller position, if I would have just traded micros and event contracts yesterday, I would have had a great day. But instead I traded the bigger NASDAQ and I got into some bigger positions. And just because it didn't go far enough for me to scale out, I just kept them. Because I look at it also like this, is like, these are the times where I'm going to hold the position. And it's not that I was really getting greedy and saying, oh God, how much more of a break do I want? I remember on this break right here, I was short, everything. And I'm like, man, this could be really good. And it came all the way back. And you're just like, okay, it's just one of those things. But I do it because there's so few mean reversion trades that if I'm going to do this, I've got to make money on this. Right. Like I haven't been short NASDAQ in months, and I'm not saying I have to go in here and kill it, but I'm going to hold it because we're staying below the area I want. And most people, when they finally get on a trade like this, they're just either going to over trade it or whatever. And I wanted to stay away from that. I said, listen, you're short, you work your freaking stop, and you're going to work some trails, and that's it. And, once again, sometimes it works out great. And other times it was like yesterday, it was like, but it is what it is.
So on a day like yesterday, big day, news day, obviously, and unusual because the news comes in the afternoon, right? I mean, generally news comes in the morning, and then even before market opens, you have all this news that's pretty much past you, and maybe a little bit of news in at the 10 o'clock hour. But yesterday, the event, and we talk about event contracts. When do you use them? On event days? You can use them any day, but so if yesterday wasn't a Fed announcement day followed by an hour of Powell talking, would you have, given the same kind of setup, would you have traded differently in terms of the markets you would have traded? Because you said you traded all three, right? Or you traded?
No, I just traded NASDAQ yesterday.
But and what I mean by that, you did it with different contracts, right? You did it with the micros, you did it with the minis, and you did it in event contracts. Would you have taken a different approach if it weren't a Fed day, if there wasn't all this volatility at the end of the day? Or would you kind of stick to that where you would say, okay, this is my, I see these setups, I see this mean reversion happening, I'm going to do this in all three areas of the NASDAQ. Do you get what I'm saying?
Yeah, well, okay. So because of the Fed day, I actually was a little bit more into event contracts. I bought 1650 or 15650 no's, and I bought 15600 no's.
Okay.
And I bought those because I'm like, okay, hopefully we just stay below really the opening range, right? And that rally at the end of the day, just above 15,600 squeezed me out of those no's, but whatever. But I did those a little more aggressively because I could stay with them on the rallies, right? Because ultimately I want to try to stay in a position. And when an event contract is a binary option. So it's, for me, I look at it and go, I'm looking at the day, will it close below there or not? Okay. And I just let it go. I bought the trade. And so I just fixed it into my risk for the day, and which I really like because, and it turned out to be two of my biggest winners were those and the micros, because once again, I was able to withstand the volatility. I mean, there's not enough being said about when I look at when I have a bias of direction, it doesn't matter to me as much. Like the technicals intraday are just not as important. It's only about position sizing. So it's funny when you look at yesterday, the two biggest winners I had were my smallest positions,
right, capital
wise, right? And the rest of it, the NASDAQ was, well, look back in here. I actually trimmed some of my NASDAQ right before the number because I'm stupid, and I'm not going to sit there and get blasted on it, even where my stop is. So I took half of them off. And then here I got nicked, because I was short right afterwards, bounced. I'm like, you know what? I put my stop a little bit above the VWAP, blasted out of it. But then the whole time my event contracts, I kept them and they ended up working, right? Where the NASDAQ, I'm getting short back in here. And by the time it crosses the VWAP, I'm getting short 20, 30 handles below it again. And I'm like, well, that sucks because now my stop is wide, and that's ultimately where you get hurt. And that's why position sizing is really everything, because I'm able with the micros, I'm just hitting the bid when it crosses the VWAP initially. Cause I'm like, if it doesn't work out, I get us above the VWAP, I buy them back. But with big NASDAQ, well, I got to be a little bit more sensitive here. And then I see it get below the VWAP. And next thing you know, it's 20 handles below. I wait for it to come back up. It doesn't come back up, sell a few. Next thing you know, it's 30 handles against you. And you're like, I still got to be in this trade. And that's where you lose the money. Right. And so I think the most important thing is, when you're looking at mean reversion trades, I mean, you could say this about anything, but specifically mean reversion trades, find the area of interest to you, find something that triggers you to get in, and just adjust your position size to stay with the trade. That's it. Don't get too complicated with technicals. Doesn't matter. It's only long or short. That's the way I look at the market most of the time anyway. I'm a little more micromanaging intraday, in a sideways trend. But if I just think it's a mean reversion trade, the market's going to stay pinned bearish or bullish, I find one way to get in, and that's it.
Okay. No, that makes sense. And I appreciate you explaining that. Feel for you yesterday. I was amazed at the volatility, even knowing that the press conference was going to be more volatile than the number that itself. Was really kind of amazed at how the market just retraced came back where it started at 230, right? That to me was amazing.
I go back to even like right in here, I'm looking at this going, why would I cover right here? I know they went to the second standard deviation. I'm looking at the whole day, mouth of the Bollinger Bands are wide open, and then bang. Obviously any sort of announcement can happen. It's just, that's what trading is though. It's never, that's why I always say, and I continue to say today, position sizing and execution are so important because, look, my idea was right yesterday. I mean, the market gave me what I wanted. I didn't take from it, but that's just not really because the market didn't give me what I wanted. It's just that my execution just was a little off, and obviously it was a Fed day, and I'm not blaming it on the Fed, but it just comes down to just that those little nuances of execution are what make or break your day. And that's why, if you believe in your homework, if you believe in your preparation, like I don't even need to look at anything. I didn't even care it was the Fed day. I did not care. I just adjust my position going into the Fed, but knowing that I just want to be short, it just clarifies everything for me. I just look at it and go, look, if it's below the VWAP, I'm short. That's it. I'm just not thinking about it. I just do it, and when it's above it, it's the same action. I'm just out. I don't want to be in. And when you look at these runs above it to only come back below it, man, they were violent.
That's right.
And I was going, thank God you didn't get stubborn.
Well, and so, going back to that daily chart real quick, did we see that now we're back above into that 30% level? So your bias today, or your approach to the NASDAQ, has it changed because it's back in that 30% window?
Yes. I talked about this on Twitter as well. I said, now it's changed, so now it would be today I come in and only look for longs, but that's not technically true because we didn't close above it yet. And I'm going to watch today's close. Today's a no trade for me. I'm actually going to start trying to trade more on these develop your edges live. Today's a day where I'm just not even going to trade. I don't even like trading the day after the Fed. I think the day after the Fed is always equally as difficult as the day of. I think that we have end of the month coming up. I'm kind of like storing my mental capital and capital for that time because I think that's where we'll have some more clarity. But if we start closing back above in this 30% zone, it just tells me that we could spike up to 16,300. It's not impossible. And we've just continued to see it. And there's one thing I should say is as you see us rotating over, we've been getting all of these previous peaks. 15,972 was that old peak. Got it, rallied a little bit above it, rotated back down. The market continues to search for resistance. It's not searching for support. It doesn't look for it. It doesn't need it. And I think it's really because, look, there's lots of reasons, I think, but I think the number one reason, especially in the futures market, is you've got a lot of people that I think, are trying to still short this thing. And I think that that's just why you don't get the pullbacks. And I know you would say, well, why is that the case? Well, people are selling. Well, it's because they're selling and it's not working, right? And that's why mean reversion trades, you have to be super patient and you have to have red light, green light. Like right now I'm red light. It's red light. I can't do it. It's back to trying to find some areas to be long, small, if you want, not necessarily today, because I've talked about the daily close, and those days are hard. That's where you got to put your grind hand out as a trader and just say, look, man, I may not trade for days here. It's different than an equities trader where you come in, you find the stock that's, in the bull market and you find the one that's a little bit weak and an up tape and you try to buy it or whatever it is that you do. When you're trading indexes, index futures, it's hard to be so technically sound every day where your strategy is going to give you, alpha. It just doesn't work that way. It was just, it's not like I always hate when people think psychologically, oh, if I want to make 20,000 a month, I have to make $1,000 a day. No, it doesn't. It's never worked that way for me my entire career. When I've made $20,000 in a month or more, it was most of the time in 4 to 8 days. It's never, ever in 20 days. Maybe not ever, but it's unlikely that in the course of my career, I've had more than a handful of months to where I just was generally good every single day because the numbers are just against you in that. It's too difficult. You have to take advantage of your homework when the market respects your homework, and when the market doesn't respect your homework, you've got to just step away.
Yeah, that makes sense. Totally understand that. You mentioned these levels, these previous levels. It's almost like a wave pattern that's flattened with the retracement waves in the NASDAQ. It's just kind of amazing. We don't see a lot of retracement with these up moves, but I like the way you've identified them because you can clearly see that the previous Bollinger Band peak acts somewhat as resistance before it tests and moves on. But I know we're running kind of late. I do want to thank you for all of this, Anthony, of course, but I think we should talk about the Ask DYE question. DYE, hashtag Ask DYE on Twitter. Send us a question. If you're in the continental or you're in the 50 states of the United States, we can send something nice to you as long as you're following us. Just make sure you have that hashtag and at NinjaTrader in the tweet itself. And this week, I think it's a pretty good question about measuring your probability or your win rate. So how do you factor in break-even trades when considering probabilities? For example, a series of 20 trades, a 40% win rate would be 8 wins, 8 losses, and 4 break-evens. But is it still is it a 40% win rate, or is it a win-loss? It's 50-50. So how do you measure that, and is that important, Anthony?
One of the first things we were taught in the trading floor was to break even on a trade. That was the number one thing we were taught. First thing. One of the first things. Second, trade first. Know where I'm getting out before I'm getting in, and find a way to scratch a trade, because a scratch is a winner. And the reason a scratch is a winner is because you're able to test the market and you're able to see if the market's going to respond to your strategy. And if you scratch it, that means that you executed well, in my opinion. Right. I always look at scratches as like, wow, I'm so happy for a scratch. So I look at them as winners. And when you go and do a strategy where it's automated, I guess you would have to look at it and say, why was it a scratch? Was it because you trailed it? Maybe there's a different variable there. And so maybe there's some people would say something differently about that. But when it comes to me and I look at my track record and I look at my days, like if I had 20 trades, going back to what that question is, and I had 8 wins, 8 losses, and 4 scratches, for me, that would be, the scratches would be winners. But once again, it's different based upon, I think, the view that you have it. If you have an automated strategy, was it a loser that you ended up buying back as a scratch? Do you look at it differently? I personally look at scratches as winners. And so to me, I would say, anytime I can get into the market and scratch a trade, that's a win.
Awesome. Thanks for that. And that was from John. John, please make sure you're following at NinjaTrader and we can connect and get you something nice if you're in the United States.
Yeah. Final thing I want to talk about today is before I let everybody go, just keep everybody in mind that, I have been dabbling a lot more. I've talked about event contracts, which you can go to placeyourtrades.com. We have an entire network on those. I know some people may have questions about me talking about trading those NASDAQs like I did yesterday. I think it's a great product, especially during events. But also recognize that Crudele has weekly options as well. And, Crudele is another market that we've been talking a lot on the show. And I said, you know what, I got to remind people that, you've got, weekly options closing pretty much every day right now at CME Group. And they are a great tool. Zero DTEs are just not going away, everybody. And I think if you're a day trader, a lot of times that's going to be a better option for you than just being in an outright future. I think that more futures traders should be going to options or event contracts for certain situations. So I just want to remind everybody that Crudele does have those daily closes as well. So it's not just indexes, it's some commodities as well.
Awesome. Thanks for that, Anthony. Thank you for being on your show, Develop Your Edge, coming back. We'll do this again next week. You will have a different host as I'll be in Chicago on Thursday. Mike Burke will be joining you. So I know you guys go way back and it's always fun to be the viewer. I get to view you guys talk. I can't wait for that next week.
Yeah. And a little plug for next week. I've been thinking about talking about how we would trade a blow off top. If you come in every day and those Bollinger Bands are open and that mouth is open, because a lot of people ask me those questions like, oh, we see how you trade when they're closed, but how do you trade when they're open? And the market might be looking to capitulate higher. So I think that's what we'll talk about next week with Mike. So I'll miss you though, buddy.
Well, I will too, but I will be watching. So good stuff. And thanks to all the viewers for coming. We will finish the day today with Mike Burke. Bars closing 3:15. Hope you're there. In the meantime, have a great trading day.
See ya.